Hi, everybody, and welcome to the Newgen webinar for Bank Transformation During Tough Economic Times, Key Consumer Banking Trends. I'm Lynn Miller, and I'll be your host and moderator for the webinar. And I want to first thank you all for taking the time to join us today. We're really excited to talk about the 5 key consumer banking trends and how they're shaping the transformation agendas for retail banks. I'll start by introducing our guest speaker, Allison Clark, Principal Analyst at Forrester. Allison helps financial service leaders understand and prepare for the future. She's a highly skilled expert with extensive industry experience in both banking and wealth management. We also have our co-speaker here, Greg Sullins. He is the U.S. Banking Center of Excellence leader at Newgen Software. And before joining Newgen, Greg held various roles throughout his 17 years in the banking industry. His latest role was Executive Vice President of Strategy, Quality, and Productivity at a community bank in Middle Tennessee. During today's session, Allison will walk us through the expected challenges financial institutions may face, while Greg's going to take a deeper dive into how Newgen can help those financial institutions overcome those challenges. And the last thing before we get started, I want to mention is that we will have a question and answer session at the end of our presentation. And we just simply request that you type in your question in the question window and at any time during the webinar, and our experts will address all of them at the end of the session. Allison, over to you.
Fabulous. Thank you so much, Lynn. Pleasure to be with you. Pleasure to be with everyone here today. Thank you so much for joining. So there's a few things that I want to go through today as we talk through what I see as 5 of the real big consumer banking trends that are shaping bank transformation, particularly at the moment, given the tough economic times that are going on. We know that we're in a time of economic uncertainty. There's potential of a recession, but we're still not sure, and all these things that are going on at the moment around the world globally, as well as the banking crisis. And as a result, what we're seeing is financial services firms and banks really battening down the hatches while the storm passes. So we're seeing things, impacting the industry in terms of, customers, for example. We're seeing customer trust completely change its course. Now, this was happening before the collapse of SVB and First Republic and so on, and the banking crisis. That's really just amplified the issue around consumer trust even further. We're seeing inflation, of course, adversely affect customers' finances. That's where, obviously a lot of consumers are looking towards their banks, and they're looking at their financial situation to try and, deal with what's happening there. Globally, there's a lot of competition. We're seeing new entrants coming into play, not just tech titans, not just fintechs, but retailers are entering the play, particularly with embedded banking. We're seeing global competitors. We're seeing some own presentation layers, others owning marketplaces and distribution platforms, and we're seeing some very different go-to-market models happening out there in the market. From an economics perspective, of course, huge pressure on existing deposit and fee-based models, high inflation, and the long tail of COVID and the war in Ukraine and all of those things that are happening. And then, of course, regulation. We've got open banking, which is already in play in Europe and many countries around the world. There's regulation coming into play next year here in the US, which will open things up even further here. And at the same time, there's things going on like the collapse of banks, which is causing regulators to want to come in and increase regulation to protect consumers. So with that backdrop, which is pretty dire, let's talk about what we're seeing in the data. Let's talk about what's actually coming out in terms of banks' business and technology priorities during this time and with everything that's going on externally. So we have some data that is kind of fresh out of the field. I think it came back a couple of months ago, about a month or 2 ago, where we surveyed banks, financial services firms around the world, and we wanted to know a couple of things. And one of them was in regards to their organization's business priorities. So we asked business and technology professionals in banks, lenders, credit unions, mortgage and non-mortgage brokers, card issuers, what is the high and critical priority for your organization in the next 12 months? Now, it's no surprise to anyone that growing revenue is top of the list there. But if we move further down the list, I'm really happy to see that the second one is improving the experience of customers. I think the message is finally happening that when you improve the experience of your customers, you will improve your revenue outcomes. You will attract more loyal and stickier customers. And so there are revenue benefits. Customer experience isn't just a nice to have, it's a must have now. Of course, there's things like strengthening regulatory compliance, environmental sustainability is becoming more and more important, particularly in Europe and other countries. They're probably a bit further ahead, I think, on that compared to North America. And then, of course, we see things like reducing costs in the middle there and a few others down that list. So it's probably not a surprising list. But I am happy to see, as I said, that customer experience is near the top. And whilst reducing costs is still there and it's still high, it's not at the expense, really, of improving customer experience, which is, I think, a really strong message out of this data. Now, when we talk to firms then that say growing revenue is a high and critical priority for them, we want to double click on that and ask them, what is it you're actually doing? Like, if this is an objective for you, then what actions is your firm taking? And what we're finding out is that the actions they're taking are around acquiring new customers, retaining more of their current customers, launching new products and service, improving time to market, and expanding into new markets. These are the top 5 from a very long list of things. And again, there's some really interesting things in there. Of course, if you're growing revenue, you want to acquire new customers and retain your customers. But I'm really happy to see things like launching new products and services. In fact, I really think that product innovation is about to hit a really big wave, and we're going to see some very different types of innovation over the next few years. And of course, time to market is just becoming critically important. Everything's getting faster and faster. In terms of improving customer experience, which, remember, that was the second kind of key objective in that big list of what's the priority for the next 12 months for your firm. If we double click on that again and ask respondents that said that was a priority, what are you doing? What actions are you taking? And these are the top 5 actions: improving the omni-channel experience, improving the in-person experience. Again, really happy to see in-person experience. And the reason for that is that we know that they are critical to driving deposits. We know that it's critical to driving customer loyalty and retention. And our data also tells us that hybrid experiences, so experiences that combine both digital and in-person or human interactions, could be on the phone, could be video, could be in the branch, they are actually preferred by customers. They create better experiences and they create more loyal and stickier customers. Why do you want more loyal and stickier customers? Because your business will become more resilient. You'll have customers become less price sensitive, and it's far easier to improve and increase your share of wallet with those particular customers. So a couple of others here on the list: leveraging emerging technologies for customers to engage with, virtual experience, and unified digital experiences. So again, the in-person, the virtual, the digital, all of this, and the omni-channel experience is all really important. And I'm glad to see it's important because it's not just about digital experience, it's about that hybrid experience that combines all of those. In terms of technology investments, when we asked firms what their investment plans were for some of the key financial services firm capabilities over the next 12 months, what we're seeing in the banking space is that their banks are accelerating their investments in 3 key areas, both in digital engagement platforms, in lending systems, and in core banking platforms. Those of you on the call that are from banks and credit unions and lenders are probably not surprised to hear that. It really is about creating better engagement for your customers. We know that AI automation and machine learning are really playing a big role in terms of lending and underwriting and creating, managing risk and those sorts of things. And of course, core banking platforms and the next generation of core banking platforms are actually quite critical. And to be honest, if we look at what firms are going to win in the upturn, I think some of them will be it will be biased towards firms that are adopting these technologies and are looking at some of the next generation core banking systems because of the flexibility that it's going to give their organisation to innovate and go to market much faster. All right, let's move on quickly to some of the trends then that I'm seeing that I think are also relevant to think about during tougher economic times. You know, I'm getting a lot of calls from firms around driving deposits. We do have some research around that called 8 ways to grow deposits. In fact, there's 9 ways, but, you know, I'll show you the 9th one in a minute. But there are, you know, 8 really core strategies. And underneath each of those, lots of different tactics, right? So from attracting deposits through online search and comparison sites through to making sure you have a very clear value proposition. I see a lot of firms and their only value proposition is interest rate. If that is your value proposition and it's purely interest rate, unless you are, you know, number 1 in the market, you're probably not going to attract deposits. And if you are number 1 in the market and you're attracting customers based solely on interest rate, you will lose them solely on interest rate. You will not retain them. There are a certain type of customer that are attracted to rates that will leave you on rates. It's a very hard game to win retention from those customers. But there's a whole bunch of other consumers where as long as you've got a decent rate, if you've got other value, other things to your value proposition, you know, it could be, you know, financial well-being tools. It could be other sorts of bonuses that aren't interest rates. It could be discounts on things. It could be other reward programs. It could be a bonus lump sum when I get to 50% of my savings goal as opposed to an interest rate. There are many different ways to think about this that isn't just about interest rates. And so I encourage you to think about that, because competing on interest rates is very, very hard. And there are a lot of consumers that may not be as price sensitive. And as long as you're offering a decent rate, some of the other value that you provide to them is enough to attract deposits to your business or to retain deposits from your existing customers. Third one here is about helping customers choose and open an account. That's clearly about digital end-to-end, but not just digital end-to-end for customers that come in digitally, because most deposits, and certainly the high quality deposits, will come through your branches and your human touch points from your contact center and your branches. We know that. You will get higher deposits and a better quality in terms of a more loyal customer from those interfaces. That being said, your branch employees and your call center employees still need that digital account opening so that they can serve the customer really quickly to open the account and spend the rest of the time having a great conversation and adding value to that customer, because that's what's going to strengthen the relationship and make them loyal and stickier over time. Number 4 is not waiting to drive deposits into new accounts. I'm really happy to see there's new technology coming out that, and US Bank is a great example of this. They've partnered with a firm that looks at payroll systems. And so what that means is when a customer comes in and opens a saving or a deposit account, they can immediately get their salary routed to that new account because of the integration that they have and the tool that the US Bank is now offering. There are other firms that claim to have tools and technology to help you bring over direct debits really quickly as well. Because again, if you want to drive deposits, you don't just want somebody to open the account, you want to make it easy for them to regularly put money in, be it their payroll or regular savings and other things. Number 5 is about earning loyalty to win greater share of deposits, right? So again, this is about doing something other than rate to help create loyalty for customers. And what we do know is creating a great experience, showing that you care for customers. When there's a great experience, when there's a problem, if a customer calls, that one time they call or go into a branch, that can make a really big impact on the loyalty of customers in the long term. Helping customers save regularly. You know, we're seeing things like AI tools that are helping customers automatically whittle money into savings accounts. We're also, you know, don't underestimate the importance of aligning all of your staff, including your front line, around the importance of driving deposits and having a big push for a month, say the month of June, and having, you know, leadership boards between regions and prizes and competitions and things like that. Don't underestimate the power of your people on the ground and in the contact center of driving those deposits, because they will certainly be, I think, of a higher quality than what firms are often getting just through, you know, digital advertisements. And then lastly, analytics and insights. This is probably one of the most complicated marketing campaigns you'll ever run because the permutations are in the thousands in terms of the journeys you need to orchestrate for your customers to get the right offer in front of the right customer at the right time. And so analytics, AI, machine learning, automation are all really important to win in this market. And then there's a ninth one that we're seeing, right? There are 8 ways to grow deposits. The ninth thing that we're seeing is this was happening before the collapse of SVB and you know, the acquisition of First Republic, but now we're seeing a lot more firms come into play and thinking about this. And this is for customers that have deposits above that $250,000 FDIC insurance. So what we're seeing is effectively deposit swap programs. So Intrafy were the first to do this. They have a network of, you know, small and medium-sized firms. So what happens is, if I go to a bank and I put in, say, $270,000 and I sign up for this program, my bank will take the $250,000, which is FDIC insured. The $20,000 they will deposit with a network bank. They'll get $20,000 in return from another customer. But me, as a consumer, means my entire $270,000 is FDIC insured. SoFi have actually built their own deposit insurance program and network of participating banks. So again, they can maximize the amount that is insured by the FDIC for consumers, because we know that's top of mind given the collapse of SVB. All right. Couple of more trends quickly to talk about. Deposits is the big one. I know that that's where a lot of firms are focusing right now, but don't forget customer experience. Again, really pleased to see that firms are saying that's a priority. But when you're thinking about it, you want to be thinking about, as I mentioned, hybrid experiences, right? Don't just go straight to pure digitization. The reason is that even for deposits, it's not going to be it's not going to give you the best revenue outcome and the best outcome in terms of customer loyalty. So in other words, it's not going to help your business resilience either. So you want to be thinking about how you deliver experiences that combine both digital and human, right? The digital experiences will give you ease and effectiveness. The human elements will give you emotion, and that's what drives loyal and stickier customers that are less price sensitive. You also want to earn customers' trust. It's been an imperative for years, but it's even more so now with the banking crisis and what has happened there. You know, we are seeing trust. It's becoming very complicated, and it is changing, right? Trust is not just you're keeping customers' money safe and you're not having a data breach anymore. Clearly keeping your money safe is becoming top of mind given what's happened recently. But what's important to customers is you take their side, you show that you care about them. What's important is that you show that you care about their financial well-being and you're helping them improve their financial situation. So things like financial well-being tools, money management tools, those are the sorts of things that can really, helping customers achieve their financial goals. Those are the sorts of things that really help build trust. If all you're doing is engaging with your customers to sell them another product, you will lose customer trust. You need to be adding value beyond that. Personalization is also picking up pace, and customers have an appetite for it. They do want to see the right offer at the right time that's relevant for them. That is one part of it. But there's like a whole nother part that customers are interested in, help when they might be going low and might overdraft their account, help to understand, how to do things better with their money. Perhaps if there's a problem on their account, maybe there's a duplicate charge or something happening. So personalization is really picking up pace, not just in terms of banks and financial services firms offering it, but consumers. It's now becoming table stakes in terms of their demand for it. Interesting though, as I talk to firms, they tell me that they really want to personalize at scale, yet only 27% of banking decision makers tell me they're using AI to do it. If you want to personalize at scale, you need to be thinking AI, ML, and automation, otherwise you will not get that scale. All right, our third trend is what we're seeing is that product innovation is really ramping up, but it's shifting. It's not your old product innovation. It is changing to solutions, not just product features. We are getting solutions that are embedded at the customer's point of need, like point of sale lending. Buy now, pay later is a great example of that. And what we're seeing is innovation is driving both modular and what I call merged or blended products. And I'll show you an example of that in a minute. Adopting modern and flexible digital banking platforms is going to enable you to get into this space, not just in terms of innovating faster, but a more flexible way of delivering solutions to your customers. So a couple of things. We're seeing product lines blurring in order to deliver more customer-focused solutions. For example, we're seeing credit cards with buy now, pay laters attached to them. We're seeing debit cards with buy now, pay later. And we're also seeing deposit products that are a combination of checking and savings. And within that, customers can, have multiple savings buckets or multiple expense buckets, and it's all within the one account. So we're seeing the lines blurring between traditional product lines, and it's more solution-based to the customer. The other thing that we're seeing, we're starting to see this already, and this is where the future is going, is modular accounts. So the idea is a customer is I go to a bank and I only open one deposit account and maybe only one loan account. And on the deposit account, in my digital tools, I get to choose, I'm going to have an everyday spending account, then I'm going to have an expense bucket, maybe for my rent, an expense bucket for my groceries, an expense bucket for my transport, and I get to name them and decide what those expense buckets are, and each of them can have a virtual card attached to them. So when I go to the grocery store, I can use the virtual card for my grocery bucket, right? I'm not moving money around, so my access points in and out are really easy. Then I have my savings bucket. So instead of having 3 savings accounts, if I've got 3 savings goals, I just set up the buckets and name them what I want. Maybe one's saving for a car, one's a home deposit, the other's a longer term savings goal. And depending on whether they're short or long term, I have different pricing, different features, different benefits, maybe even rewards, like goal specific rewards. Maybe I'm saving for a holiday, and when I reach 50% of my goal, I get a $50 voucher for Expedia from my bank. That's amazing, right? These are the sort of things that will happen and start to change the game in terms of offerings out into the market. On the right-hand side with the lending, I go to my lender and I get approved for a certain amount of secured and unsecured loan. Let's say I have a $10,000 credit line for unsecured, and I could use it for an everyday card, I could use a travel card, I could use it for buy now, pay later, or a personal loan. I get to choose, and I am not doing an application form and having a KYC and a credit check every time I do that, because when I joined the bank, they just approved me for that $10,000. In fact, we're already seeing this from Citi. So if I look at this, this is a Citi account. Let's say the credit line, unsecured credit line with the credit card is $10,000, and just a little under $2,000 is utilised right now. So I've got $8,000 left of my unused credit line. I could use that for the credit card. I could use that for buy now, pay later that's attached to the credit card, and buy now, pay later rate, of course, is lower than my credit card. Or Citi are telling me I can also use that as a flexi loan. So they'll let me take a flexi loan out for that remaining credit line amount. And you can see on the right-hand side, I could choose 36, 24, 12 months. No application fee, no credit inquiry, no origination fee. And the monthly payments on that loan will then be included in my credit card minimum. So it's all wrapped up together. So this is what I mean about products being modular and merging and starting to create solutions so customers get to choose what they want. They're not filling out application forms and opening and closing accounts and doing credit checks every single time. Right, 2 more really quickly before I wrap up and hand over to the Newgen team. So number 4 is open finance is both an opportunity and a threat. We know what's been going on in Europe. It's starting to happen in Canada and Australia, and in the US we have some regulations that are going to come into play next year. And it's not just open banking, it's open finance, and it's about open data between telcos, healthcares, retail, etc. And what that means is that we're seeing a whole new different way of thinking about your route to market. You need to be thinking about multiple routes to market to compete in the future. In some cases, you'll still be in that traditional space on the bottom left where you own the product and you own the distribution. But new opportunities are emerging. Maybe you own the product, but you don't own the distribution, and the distribution is through an X as a service supplier. So it's somebody else's platform. Or it could be that you're white labeling something, or it might be that you own a platform and you're putting other people's products onto that platform and taking a clip that way. The point being, in the future, you won't always own product and distribution. You will probably excel in one or the other. That is where we're going. And in order to get there and maximize revenue for your organization, you need to be thinking about multiple routes to market, not just that bottom left corner anymore. We've already got a number of firms doing this. So my number 5 trend is about competing and collaborating with tech titans but also retail titans. It's not just tech firms anymore. I mean, there's so many partnerships that are now forming, not with just Amazon, Apple, and so on, but we've got Walmart, Shopify, Lyft, T-Mobile, you know, Walgreens, CVS. You know, there are Rakuten. There are many, many retailers that have raving fans that want to embed finance at the point of sale. It could be debit, it could be credit. They are looking to offer banking products to create better experiences for their retail customers, and they need bank partners to do that. Great example of this is a firm called Railsr. You may know them as Railsbank out of Europe. They offer modular technology components to help other brands like retailers embed financial services in their proposition, right? Could be embedding credit into your experience at the point of sale, embedding banking, embedding wallets, or embedding even rewards. So they offer all of these things and they've packaged them up to be able to let other brands take those to market. And so again, you know, these are different types of income streams for the organization. Stripe is another example. You've probably heard of some of the Stripe partnerships. So Stripe Treasury enables platforms like Shopify to offer merchants financial products. So let's just say I'm a retailer, I'm on the Shopify platform. Not only am I doing all my business on the Shopify platform, but now I can do all my banking on the platform. Why? Because Shopify is offering my business banking products. Now, Shopify doesn't have a banking license. Underneath, they're using Stripe Treasury, which is underneath that is Goldman Sachs. There's a couple of partnerships going on here. But it could even be that as a retailer, I want to offer my consumers banking products. So there's multiple layers going on here with banking as a service, APIs to both marketplaces and platforms in order to create new distribution routes. But it's also back to this embedding products at that moment of need for the end consumer. So that was a whistle-stop tour of the trends that we're seeing and what's happening. You know, there's a lot going on. I get a lot of calls from firms around what they should be thinking about now, given, you know, we're in a not so certain economic time and potentially going into recession. You know, what do they do about it? And my advice is always the same. I'm old enough to have been through many of these and seen what makes firms win or lose, and it is, you need to prepare for the upturn, not the downturn, right? So whatever you do now, even if you're looking at cost reduction, don't go too far and sabotage what you may need in the upturn, because as soon as the economy turns the corner, that's when you want stickier, more loyal customers. So you want to get closer to your customers. You want to be investing in great experiences and quicker routes to market for your products and services. The reason is that those are going to be the winners in the next economic run, which could be what, 5, 10, I don't know how many years that upturn will be. But those winners are being made right now in the downturn with the decisions that they make. So I do encourage you to think about the upturn, get close to your customers, think about adding value to your customers now, even if they're not buying products from you, because as soon as they're ready to buy products, if they are a loyal fan of yours and a loyal customer, they will be more likely to do business with you, and they will be less price sensitive, which of course is, you know, makes your business much more adaptive. So with that, I'm going to hand back to the Newgen team and let them continue with the rest of the session, and I'll join you again for questions. Thank you.
Thank you, Alison. All right, now it's time for a poll question. Once you see it on your screen there, you will have approximately 10 seconds to answer that poll. And I do invite Alison and Greg to share their thoughts on any of the answers we get.
I knew deposit growth would come out on top. That's certainly what I'm hearing on the ground as well. But again, customer experience is coming in a very close second. Product innovation is starting. I think we'll see more of that as we start to turn the corner. but I think it's something that firms need to be thinking about now, because I think we're going to see a lot of product innovation in consumer banking and lending over the next 3 to 5 years, and so firms should be starting to prepare for that. And that can even feed into deposit growth and great experiences. So they're not necessarily mutually exclusive. That will be my comment on this.
Yeah, likewise, Lynn. I'm glad to see customer experience up there. Really trying to tackle both customer experience and driving deposit growth all at the same time. We're seeing lots of different products come out, different types of CD products right now, trying to attract deposits, innovative ways to attract and retain the customers. So not a huge surprise there.
Thank you both. Well, with that, I'm going to now turn it over to Greg to help or to share how Newgen can enable these financial institutions overcome some of the challenges mentioned by Allison. Greg?
All right, absolutely. And let me get my screen. Can you see that, Lynn?
Yes, I can.
All right. Well, it's great to join you all today. Allison's comments are just spot on with a lot of what we're seeing in the marketplace at Newgen Software. Really at Newgen, some of you may not be as familiar with us. We've been around since 1992. We serve clients in 72 countries. With over 3,500 of our employees, we develop extensively research and development with over 550 of our employees involved in research and development. So many companies really rely on us extensively to help solve business problems, and our industry leading low-code platform application development allows us really to develop, deploy complex content-driven, customer engaging business applications. We do that on the cloud. But as we work with many of these global clients, similar to what you just heard from Allison, these three themes resonate whether we're working in the banking industry, insurance industry, we work in healthcare, we work in the government sector, we work in manufacturing. How can we provide a better customer experience, making it simple to do business with you, ensuring end-to-end automation, and really offering an Amazon-like experience, right? Get it now when you want it delivered in the banking sector. That better operational efficiency. We heard Allison talk about orchestrating that end-to-end customer journey. The end-to-end, and I'll talk more about that as we go through this. Empowering your employees with better tools and data. Right now, we are all still competing to retain and develop our employees. So how can we provide better tools? That's just as important as addressing that customer experience as the employee experience. And so ensuring that integrated overall efficiency. Allison talked about innovation. We're continually seeing how can you differentiate yourself or just make sure that your secret sauce is there for, as you continually look to deploy and digitize and improve your environment, continuously innovating and doing things faster. And so within our Newgen platform, we help enable these capabilities. And so as we talk about banking, and whether it's credit unions or banks here that are joining us, it's really four key drivers that we see that you need to look at holistically. The customer experience, the product innovation, the operational excellence, and the risk and compliance. What we see is many of us in the banking world have made great strides in each of these areas over time. But to really be developing your futuristic bank, to developing really where you need to move to, we all need to be working on all four of these areas holistically. Very, very, very important. And so we'll expand on that here just in this thought. Connected banking here within Newgen, we recommend and encourage best practices focus on the customer, right? It's really about the customer, that omni-channel experience that is anytime, anywhere, personalized, contextual in nature, really addressing the connected banking per se, and a lot of what we work to do with improving the customer experience, the employee experience, is connecting all of the people, the processes, the systems, the functions across your organization and enterprise, right? Where our ultimate goal, growing revenue. You just saw that from Allison's presentation. We need to be driving down our cost, but we need to be connecting the environments end to end where everyone can collaborate, communicate, and deliver on behalf of what the customer end game and what they need. So we work with this connected banking framework and have enabled many of our clients globally to transform the way that they have maybe looked at their processes in the past, the way they've addressed product innovation, how can they improve their operational excellence, and at the same time, risk and compliance has to be embedded in all that we do, particularly in our banks and credit unions. At Newgen, we have a platform approach where we refer to this as Newgen One. And this is just a sampling of our deposit account opening solutions that we offer for both the omni-channel experience, for online, in-branch, call center, the consumer loan origination capabilities, to small business, to commercial lending. And then as you're addressing all of the sales cycles, what about the customer and account maintenance? We build all of this on a Newgen One solution, which gives you a process modeler that allows you to customize workflows, put in your secret sauce, form design capabilities, business rules that you can incorporate, activity dashboard monitoring, the machine learning, artificial intelligence is a very critical piece. Again, Allison hit on that point. And the integration adapters. So the goal is you have one platform fully unified, integrated across your organization that can allow you to communicate and collaborate with your customers, your vendors, your third-party providers, and of course, everyone internal and external stakeholders within your organization. Here's an example of what we've seen many times over as we talk about connected banking. Over a timeline and digital transformation, some of our clients, whether maybe have started out as an in-branch only customer experience, but that customer is expecting much more. And maybe they morphed to doing a downloadable PDF forms. Maybe then move to archaic online page submission. And then maybe they created an actual digital account opening for the online channel, but they have the branches separate. We're talking about in a connected banking environment that gets you to a fully intuitive, integrated, all-channel deposit account opening solution for your consumer, your business customers, one platform for your account maintenance, integrated for your lending solutions, and that overall end-to-end experience where you can manage and measure, monitor, and manage the entire experience on behalf of your customers and continuously improve that experience. Here's the great divide that we often see: the front office and the back office. And there's just various distributed work, there's disparate technology systems, there's sometimes different objectives between what the front office is looking to do and maybe what the operational team is trying to do. With Newgen, we bring together this environment as one, where the objectives align around delivery on behalf of the customer and everyone can communicate. You're not rekeying data or having information that's not talking from one place to the other. So we really look at this as, when we say end to end, we mean end to end, delivering that loan process, or that new account opening process, or that account maintenance activity, connecting everything holistically. Another example and challenges we see is moving to that single platform, that integrated system with key results areas defined, a workflow engine. Many times 60% of the customer experience is really on the back office versus the front office, making sure that everything gets delivered, it's the right expectations, and that you can do what you say you're going to do on behalf of your customer end to end. And so our goal in working with clients is bringing that end-to-end picture together. As I mentioned earlier, as we look at, here's an example of lending and how we've worked with clients to develop applications to, again, design a no-touch, low-touch approach. We have worked with the front-end design of and develop promotion codes, different branding experience, created automated underwriting rules and control processes, all the way through to the integration environment that is really critical. Here's an illustration. Allison talked about cores and different things. We integrate with many of the core platforms, practically all of the main ones that are out there, such as Jack Henry and FIS and Fiserv, and there's others. But it's beyond just the core integration. All of your credit bureaus, all of your electronic and e-sign solutions, bringing that holistic environment together as one environment that you can deliver and manage, again, the customer experience, manage, deliver product innovation, be much more efficient, and obviously manage your risk and compliance. That is what success continually evolves and looks like as you can deliver this overall environment. Now, that remote collaboration is something, particularly in some of you doing maybe real estate lending or other things with your loan transactions, the ability to communicate with your borrower where they have their device and they can upload documents or get status information. The appraiser or maybe attorney involved can collaborate on the portal and desktop. Any of the other stakeholders within your organization, delivering that connected environment, connected banking is really key, and that's what we do here at Newgen. I'll give you a few examples here that of clients that we've worked with. Operational efficiency. Here's a Tennessee bank. It's about $4 billion in assets, 29 offices, 9 counties. They use Newgen One platform to really enhance productivity, efficiency for their digital account opening and account maintenance. You see that they went from new account opening time in branch from 45 minutes to 10. Their new business accounts time was cut down substantially, and as well as existing customers. So cycle time reduction. Now it's clearly operational efficiency, but you can also imagine they improved the customer experience as well at the same time. This gave them the ability to open accounts and a 300% increase in employee capacity, which gave them the efficiency. They was able to eliminate exceptions, and they practically integrated 17 different applications to make that seamless experience and everything talk and collaborate. And that was just the starting point of initial. There's improvements now move well beyond that example. Here's an example of a credit union in Georgia, $3 billion in assets, 200,000 members, and they used Newgen One platform for both online deposits and loans. Really, they are acquiring new members, and they provide a solution to open an account from 15 minutes down to 5. really one-stop shop to open accounts, applying for the loans online. They had a 35% reduction in their back office time. They had almost a 70% applications opened online when they had a lot of these. This happened just before COVID, and their customers responded, members responded overwhelmingly to the online channel and capabilities, making it much easier for them to cross-sell between the loans and deposits, and have, of course, the integration of the platform. So a powerful example there. Here's an example of deposit growth. I know that's on a lot of your mind, and this is a client that is in Kansas, about $5.2 billion in assets, 50 branches. And what they looked at was they needed to find a way to grow beyond just their footprint. So they have created a digital-only bank where they can grow deposits, expand their use of their national charter, have flexibility in both their brand for their traditional bank versus their digital bank. Then they were able to really use this as like a faucet to turn on based on rates and different competitive levers, where they can manage their loan to deposit ratios much better. And then, of course, they used a centralized delivery team to handle both the traditional bank and the digital only bank. Again, creating that connected banking, improving customer experience, efficiency, product innovation across the board. So let me just kind of sum it up here a little bit about the underlying Newgen One platform. I've touched on some of these pieces and parts here, but what we really like to work with you is, this is a low-code application development where we can quickly get time, to market. We've got process automation and journeys. We will incorporate the orchestration of your process, the way you want to do business. Perhaps we have to incorporate other things like RPAs, robotic process automation. It's all contextual communication, so that's key. However the customer wants to be communicated with, maybe their mobile device, maybe it's by email, maybe text, all of those capabilities. The integrations are really key. It's one of the differentiators, and Newgen's capabilities is the ability to really integrate with anyone with open APIs and capabilities, but bring together the governance of the system, security of the system, married up with artificial intelligence and capabilities. Really second to none out there, consistently recognized by leading analysts and various groups like Forrester, acknowledging the work that Newgen's been doing in the marketplace in banking. So I wanted to just kind of wrap with thank you all very much. We'd like to squeeze in some time for some questions if we can.
Thank you, Greg. So now we will show you a second poll question here. And again, I encourage you to answer once you see that pop up on your screen. And then we'll get to some question and answers from the attendees here. Okay, thank you for that. So we'll go ahead and we'll start with some questions. Again, just pop those in the question box here in your webinar, and we'll read them aloud. We'll start with one we've got here, and this question is for Allison. Says, in the face of tough economic conditions, how can banks balance the need for cost-cutting measures with the importance of maintaining high-quality customer service and satisfaction?
I think my first comment is they're not mutually exclusive, right? Delivering great experiences can also be about delivering more efficient experiences. I think what's important is, as you're thinking about experiences that perhaps you want to take some costs out of, don't just do it with the focus of removing all of the human engagement or anything like that. Really put yourself in the customer's shoes and map the customer's journey to figure out what is going to create the best experience for them. And what you may find is that there are some areas or some particular parts of that journey where you do need to be thinking about letting them engage with a human if they want to, or do something. It doesn't mean you can't remove efficiencies. For example, we talked about digital account opening. Digital account opening isn't just for customers to self-serve online, right? Real-time account opening, fast, within minutes, is a great tool to put in front of your frontline employees on the phone and the branch, etc. So again, there are things that you can do to create efficiencies that can still deliver great experiences, but you need to think about it holistically from the customer's point of view. And I don't think they're mutually exclusive. I think you're on mute, Lynn. Sorry.
Thank you, Allison. Greg, anything for you to add?
No, I mean, it's consistent with what Allison's mentioned, Lynn. It's challenging yourself as an organization to really rethink the way things are from a customer's perspective and look from the outside in. The more that you can do that, it's going to challenge paradigms to make that happen, but you're going to be a better organization as a result of it. Again, you still have to address your risk and compliance, still have to address all the other pieces and parts, but there are better ways to look at it from, again, how do you create that Amazon-like customer experience? And it will get you to the better answer, both efficiency-wise, customer experience, and revenue growth.
Gotcha. Thank you, Greg. The second question we have here is for Greg. It says, what should be the first step for banks to transform their operations and adapt to the changing consumer banking landscape during these challenging economic times? So that first step.
You know, that first step a little bit is kind of a internal gap analysis, right? You know, where are they in terms of objectives? Are they fighting to get deposits, right? We've seen some of our clients have come to us, and deposits is something they need to solve now, and they've implemented in many cases business online account opening, which can get outreach to get bigger deposits, but it needs to be married up with not only just digital but the hybrid approach. Allison mentioned this as well. The more that you can create the tools to many of the business owners, for example, they don't have time to bring all the owners in or signers during banking hours to do business. But if you can initiate a process maybe, and then tonight when they get home from a long day's work, they can sign, they can fund, they can do everything. So that's just one example. But we have other clients that are really addressing small business loan origination, as well as retail loan origination. So it depends. The starting point is just getting committed that you're going to do this, and then getting the right people in your organization aligned to make it a success. And obviously partnering with someone. We hope you partner with Newgen, but to help digitize and move the journey forward.
Very good. Thank you. Let's see. This one's Allison. So it says, how does a bank set priority when deciding where or when to start their transformation?
It should have happened yesterday. You're always going to be too late, so keep like you've got to start now. There is urgency, and even if you think you've done it, you have not done it. Transformation, digital transformation, is never ever done. It's an ongoing thing. So let me just point out, if you haven't started, start, and if you think you're done, you're not done. So keep going. That's the first thing. But in terms of priorities, it's back to what Greg was talking about, right? You should be looking at what's going on in the business. What are the business goals? What is the firm trying to achieve in the next 12 months, 3 years, 5 years, short, medium, long term? And then in terms of where you start is you want to build a roadmap. I see many firms trying to do this with no roadmap. And that roadmap, it doesn't need to be exactly prescriptive, but you need to have some sort of vision of maybe the milestone of where you'd like to be in 3 or 5 years, right? Again, now that's always going to keep moving and you've got to keep looking at it. But then what you do is you bring it back and you make sure you're doing a portfolio of things, right? You want to be doing some things that get you some quick wins. Maybe that is to do with deposit origination, because that's so important in the organization, and you start focusing on that. But there are some other things, not just around deposits, but you know, AI, machine learning, and automation you may want to be investing in for your marketing organization, because they won't just help you with deposits now and later, they're going to help you with everything in your entire business, right? And then things like customer journey orchestration and analytics, those sorts of things, again, they may be a medium or longer term investment. And you might go, oh, we can't, we're just focused on deposits right now. But you're going to be in the same position next cycle when you want to do deposits if you're not trying to solve some of this now. And some of these things around AI, machine learning, journey analytics, etc., and journey orchestration isn't just about deposits. It will help you with all the things you do to engage with the customers. The point is, it sets you up for success in the longer term. So think about a portfolio, short-term quick wins aligned to business goal priorities, medium and long-term things that are not just aligned to business priorities, but will give you flexibility to set you up for success in the future, depending on where that may be. In other words, it makes you more adaptive, it makes you more flexible as an organization, and it's giving your organization a toolkit so it doesn't matter what happens in 3 to 5 years. You're starting to invest in those tools and technologies to help you get there and can continually transform your business, because it's never done.
Right. Thank you for that. It looks like we are now at time with that. So I want to thank everybody again for attending. Thank you to our speakers, and hope everyone has a great day. Thank you.
Thanks, Dan. Thanks, Allison.